as always, at 3:30 Tuesday and Thursday, we have Tim Ord from Ord Oracle. And Tim, how are you?
Good. Glad to have you on.
Pleasure. Tim, before we do anything else, can you just tell folks how they can reach you, please?
You can reach me at www.ord-oracle.com. My email address is tim@ord-oracle.com. I'm also on Twitter, which is oracle.com, I think it is, or something. But yeah, I am on Twitter. You can look for me. So let's get started. Let's look at the markets here. All right. Actually, at one point, I think it was last Thursday, I was predicting the market's going to pull back down into that 670 area. And anyhow, I did get long. I think it was last Thursday or something. I'm long the market. There's other indicators I have on a bigger time frame suggest this rally's not over. But I was predicting a pull back down to that 670, which is basically where the support area is right here. And when I did this chart, we're right very close to it. And the trend was 1.2. We had 200 downtick readings. Trend since then is up around 1.4. And so this is a bottom. When trend gets up around 1.2 and higher, that predicts market has panic in it. Panic only forms near lows. And I marked the previous times here and here where the trend readings got above 1.2. And that's the support area. That's usually where the rallies start from. And once you get a panic area, if you go back into it, normally the trend starts to rise again, showing that that area has support. And that's exactly what's happening here. So we're looking not at a downtrend beginning, but an uptrend is about to begin. Can it get into the 670 area? Maybe. But usually when the trend closes up around 1.2 and higher, that's usually it for the downside. So we're looking at a low probably in this vicinity right now. Is it today? Is it tomorrow? Don't know, but I think something that the election in Virginia and New York is probably having a little bit of lean on the market. But the outcome should be bullish for the market, maybe not for New York, but as far as polls are concerned. But anyhow, a rally is about ready to start. We're in the vicinity of a low. I'm already long from last week. This is the monthly chart of the SPY. I did this earlier today. Previous high was 689.70. This is on the SPY. And I just want to point out, markets never make a top. Where's my little button? Here it is. Markets never make a top in higher volume. Usually, at a minimum, they go back up and test the high. And if the test comes on lighter volume, that's usually a resistance area, and market could pull back. If it goes back up and tests a higher volume on a test of the high, usually the market keeps going. And so far, since August, we've been making higher highs and higher volume. So it's not a top. The last time we made a higher high on lower volume was back in, this was February, and the market pulled back. So that high came in, this high here, that's that high. You can't quite see it, but it was on lower volume. And that was a warning sign the market may pull back, and that's where you got the decline coming from. Here we don't have that. So at minimum, we're going to go back up and at least go higher above 689.70. If volume's higher, we're going to keep going. If it's not higher, that could be resistance. We'll have to wait and see. But in general, I think we're going to keep rallying all the way into possibly January. So the bigger trend's bullish. At a minimum, we're going to test 689.70 and possibly even keep moving higher. So S&P-wise, we also have seasonality bullish all the way into year end. So the next 2 months, this month, next month, are probably up months. How much of an up month? I think at least 5%. There's some other stuff that suggests maybe higher. But we got a decent rally in front of us. So we're long, we're staying long. And we'll see what happens next year. There's another statistics. I do some I have a paper that I do that has quantitative analysis, and this would be the third year in a row where the market was up double digits. It was providing this year remains above 10% up for the year. And so we got 2 months to go. I think that will probably happen. But last year we're up double digits. The year before we're up double digits. And most likely we'll be up double digits this year. If we're up 3 years in a row with double digits, the year after, which is next year, is usually down. Depends how much, but the best month going back to 1930, I think the best year was about up 4%, but majority of them were down next year. So this is next year could get a little rough. How rough, I don't know. But this rally over the last 3 years is just not going to continue. So there's a good chance there's going to be some sort of high next year. Where that comes in January, February, March, or April, it's hard to say. We'll have to actually look at the monthly volume and see what it does going into January, February, and March or April. But probably the first part of the year is going to be some sort of a high, and that's something to look for. But between now and then, it's worth staying long. But next year it doesn't look good, as good. I'll put it that way. So,
can I just ask you the trend line, that curvy line at the very top of all your bars? Is that a Bollinger Band? What is that moving average?
Yeah, that's a Bollinger Band. It's a weekly Bollinger Band standard deviation. So,
and it's hugged it beautifully, huh?
Yeah, it's just hugging beautifully. Volume's, you don't want to get too far above it. If you get 50% above the trading range, in other words, open close is above the upper Bollinger Band by 50%. A lot of times you'll get a pullback. And I'm thinking there's a good chance, maybe not November, but maybe December, you're way above it. See, for instance, this was extended. I don't know if you can see this, but if you're close like up here where we are, if you're 50% above the upper Bollinger Band, a lot of times you get pullbacks. So we don't have any examples on this chart.
No, it's just been straight up, yeah.
Yeah, it's kind of tricky. You just want to hug the upper Bollinger Band, and you don't want to get too far above it because that also means a pullback. But I hear the music.
Okay, good. We're looking for which chart are you going to go to next? Are you going to stay with the SP? Or are you going to go to the GDX? Go to the gold.
We're going to go to the gold.
Okay, that's wonderful. Great. We'll be back with Tim Ward, folks. Basil Chapman sitting for Tommy O'Brien. The Dow is down 239. S&P's down 70. We'll be back in a moment. In all the years, I must say, every time I hear that Tom O'Brien, I love that little section. It's just, I like it. All right, we're back with Tim Ward, and we're going to go to the gold chart. Tim, fire away.
All right, this is the bullish percent index for the gold miners index. Bullish percent index measures the buy signals using the point and figure method for the the gold miners index. So when it says 68%, in other words, 68% of stocks in gold miners index are on point and figure buy signals. So that's what that is. Then I did a ratio with GDX, and it works pretty well. This chart goes back to 2008. And I put an RSI on it, which is the top window up here. And every time it gets below RSI below 25, it's been as low as 19 and moved up here a little bit, but we're still at 2242. So what this indicator says, we're in some sort of a low area. And I marked the times. This is a weekly GDX going back to almost 2006, and marked all the times with circles. And we're in a buy area right now over here. And it can be a little bit sometimes over this area here. It just marked a low, went sideways for several weeks before it got going. So it gets you in the low areas, but it works really good. I think so far it's done it 12 times, not counting this time, which is on a buy signal. 11 times before that, he had one failure, so the percentages worked out 91%. So there's a high probability that we're at a low in this vicinity. This is a weekly chart. Doesn't pick out the exact day, but it gets you pretty close. So we're in a low area. So I think it's I didn't put a GDX chart up because I think GDX is making a low this week. But here's another momentum chart, kind of shows you what was happening here. Even though the top window is a GDX, next window down is a daily cumulative up-down volume. It's a cumulative now. It measures on a cumulative basis. Next window lower is a cumulative advanced decline. And every time it stays above the mid-Bollinger Band, that would give a bicycle back, looks like about approximately February here. As long as these two indicators stay above the mid-Bollinger Band, if you can see, we're way above the Bollinger Band. Bollinger Band's down here. The uptrend's intact. So you can have pullbacks, but as long as it stays above the mid-Bollinger Band, which is all the green areas, the uptrend's intact. The last time it gave a sell signal was back in November of 2024. It didn't pick, it's a little bit delayed, but kept you out of this decline that lasted into basically February. You got out in October, it looks like, and it got you back in late January or possibly early February, so it stayed out. And so far, this is a longer-term indicator. Remained momentum in general remains up on up-down volume advanced decline, so trends up. So on a short-term basis here, I'm just looking for a short-term low. So, but the bigger trend's up. This is a real big trend. I'm thinking this is a 12-year cycle from here to here. And the chart goes back to 82, and it measures the times when the middle window is the monthly XAU to NDX. So it measures the gold stocks against NASDAQ stocks. And so as long as these, so I put an RSI with it on this ratio, as long as the RSI stays below 50, that says the NASDAQ is outperforming the gold stocks. When it's above 50, which is starting right here, stays in the blue area. When RSI is above 50, then gold stocks are outperforming the NASDAQ stocks. Then
what
the last
is it 12
years, huh?
What price is it at now? It's a little difficult to see.
What price of what, the RSI, you mean?
Yes.
RSI is coming in at 57, almost 58.
Okay, good.
This is we're over here on this area right now. It gave a bullish signal intermediate term here, I don't know, mid 2024, because once the RSI breaks above 50 is your signal, and this went to 70, so is an initiation of an uptrend. So this cycle may go on for another 12 years, which would add 12 years to 2024. You come in at 2036. So we'll see how that happens. But these gold stocks are strong. We got a little consolidation going on now. Excuse me. But probably gold stocks are outperforming the NASDAQ stocks over the next 12 years. I'll put it that way. It's worked out pretty well in the past. A lot of these gold stocks, the little ones, which I'm going to, we got a couple of minutes here. I just want to point out some buy signals. How do you choose gold stocks? This is I showed this last time. Is BE Bellow Sun Mining. To get a buy signal, you need, this is a monthly Bollinger Band. It's got real narrow. You know anything about Bollinger Bands? When the Bollinger Bands start to squeeze, you got a big move coming. That worked out perfectly. And the signal comes when you get a sign of strength through the mid-Bollinger Band on a monthly time frame. And if you notice a big jump in volume right there, smack, that's through the Bollinger Band. So that's your buy signal. Comes around a nickel. And so as long as there's monthly Bollinger Band, mid-Bollinger Band's going up, the uptrend's intact. So it's quite a ways from it. Here's an example when you get above the Bollinger Band, 50%, you get these minor consolidations. There's another 50% above Bollinger Band, you get another consolidation. But as long as you're above the mid-Bollinger Band, the uptrend should continue. So I'm long this stock. Here's how it works in the past. This is RIO2. Anyhow, it gave a buy back in, looks like probably December right there. Big shot up in volume above the mid-Bollinger Band. And here, a big rally. So it gave a signal around 40 cents. You're up around $2 area. This is Canadian, but that's how it works. Here's one that just flipping to a buy signal. I brought this up last time. Is Walter Lane Research. This is a Canadian symbol, but it did. If you notice how big this volume is,
Ooh, look at that! Yeah.
Yeah, it's never been higher going back for a couple 3 years. So that's a big surge through the Bollinger Band, and you got a little consolidation going on. But once it gets through the mid-Bollinger Band on huge volume, you can have consolidations, but I think this is still in the early stages of a major move up. We got a little bit more time. This is West Haven. We talked about this last time. We got a bicycle back in mid-2017. It's kind of the same thing. That was a big volume jump back then compared to what it was before. But now we got a huge volume here. So this is kind of a bicycle too. I hear the music.
That's fabulous. So folks, Tim Ord, Oracle, check him out. It's fabulous work he does. We've listened to him for months and months just talking about the gold stocks, and they've been performing fantastically. Now they're taking a bit of a breather, and that's what he was talking about. Hey, Tim, thank you very much. Look forward to Thursday's interview.
All right. Talk to you Thursday. Thanks.
Thank you. Right, bye-bye.